In the US, February was a stellar month on the market as the Dow Jones Industrial Index closed at a record high for a 12th straight session on the 27th of February, representing its longest streak of consecutive record highs since 1987. Hopes for tax cuts, a rollback of regulations, and promises of big federal infrastructure spending helped fuel the rally. The Dow Jones closed the month up 4.7%, the S&P 500 rose 3.7%, and the tech-heavy Nasdaq ended the month 3.7% higher. Energy sectors, however, were dragged lower by a lackluster oil price and collapsing natural gas prices. Major emerging markets were also among the standout performers, with equity indices for China and India up around 10% and the Brazilian Bovespa up over 15% in US dollar terms. The only member of the BRIC grouping not performing well is Russia, with its equity index down around 5% year to date, primarily as a result of the heavy skew of its equity markets to energy companies. During February, the last few S&P 500 companies announced results for the last quarter of 2016, with more than 70% of them beating earnings expectations to deliver average earnings growth of over 6%. This represents the highest quarterly earnings growth in over 2 years. Looking at yields, US short-term interest rates continued to drift higher. The market implied probability of a rate hike by the US Fed in March jumped from below 30% at the beginning of February to over 50% by the end of the month. US 10-year bond rates remained largely stable, struggling to disconnect from Japanese long bond rates, which have been held down by quantitative easing, and German long bond rates, which have been held lower by a combination of QE and a popular trade of buying German bonds and selling French bonds to mitigate the risk of an extreme outcome in the upcoming French election. Looking at currencies, despite the increasing probability of a US rate hike, the dollar had a mixed month. Flat against the Japanese yen, significantly stronger against the euro and the British pound, and weaker against most emerging market currencies.